Hello there, Maverick traders. This is Rob Reinhold. This is the Currency Room, August 17th to the 22nd. I'm going to be flying solo. Ankit has the day off. Let's jump into it. In this session, we're going to be going over all the news of last week. We had a bunch of new all-time highs in equities. We had cryptos with a major intra-week reversal. But that is last week. We're going to score everything from +3 to -3, and that's going to tell us where we're going to trade next week.
All trades and analysis in this video are intended for professional traders only. This content does not constitute financial advice and is for educational purposes. This video is being released after a short delay due to Compliance Department review. Maverick members receive this content immediately as part of their daily trading resources. If you're ready to level up, consider joining Maverick Currencies. Our traders trade firm capital and keep 70 to 80% of profits. You bring the skill, we provide the backing. Let's get into today's market recap and see how the pros are trading the currency markets.
All right, let's start off with equities. They were stubbornly bullish, and we've talked about how bullish equities have been and how we're in this late August period where it's very typical for markets just to keep growing and grinding higher. The volumes are down a little bit. A lot of people are on vacation. New money's coming into the market. It's just to grind higher. It's one of the reasons why September 1st through October 15th is historically the worst period for the stock market because it's usually following a really light volume run-up that happens in August. So we're reaching the end of August. I'm going to start talking more and more about these seasonality patterns where we typically get these big reversals. But as far as right here for the next week or two, I don't see any reason why equities don't continue to grind a little bit higher. They are getting tired, but I think they grind higher. We got one central bank last week. The RBA came out. They cut rates as expected. What was not expected was they downgraded the future economic growth, basically saying we might have to cut more. The market had priced in one cut and done. That is no longer the case in the Aussie. That being said, the Aussie was flat on the week. And then cryptos were really the big story this week. We had a huge rally early in the week. At one point, we had Ethereum up about 17% on the week. This is after up like 13% last week. And then it gave it pretty much all back by the end of the week. So big volatility in cryptos. We'll definitely be taking a look at playing those this week. Let's go over some of the other news out here. Core CPI in the US. Okay, so when this number came out, the market liked it. The core and the headline came out as expected, but the year over year was a little bit less than expected. They cheered. They said, yes, this is exactly what we want to see. More reason to buy more stocks, even though they are at stratospheric levels. And then we got the PPI on Thursday that was, wow, I don't know if I've seen a worse inflation report. I mean, I don't think I've seen numbers miss as badly. Estimates were for a 0.2. It came out at 0.9. That is just so incredibly hot, inflationary. All of a sudden, the market said, oh, we overdid it. But people came back in and bought up equities. And on Thursday, the market barely closed down. And actually, the S&P closed up on the day. So the buyers are still out there, and they are still ignoring bad news. Cheering good news, ignoring bad news. That's exactly what happens in bull markets. Another thing that happened on Thursday was UK GDP, and that was a big beat. So last week we had hotter than expected inflation out of the UK. This week, hotter than expected economy. The pound's on fire right now. It was the best currency of the week. And then to finish off the week, we got US retail sales came in as expected, a little bit light, but last month was revised higher. So no one really cared whatsoever. So as you can see here, the economies continue to roll on. There continue to be some surprises, but let's see what it meant in all of the numbers. Last week, equities up about 1%. Now look, this is a big week. A 1% gain a week in equities is a pretty good week. But remember, we've been having 3, 4, 5% gains. We're running out of gas. We'll take a look at the chart here in a second. We're running out of gas. Crypto was up huge at the first part of the week, gave it all back the second half of the week. We'll definitely be taking a look at those. Gold and oil down. Gold down almost 2% on some US dollar strength. Here we have the S&P. And I gave a little bit longer chart because I wanted to just really bring the point home that in a trend, there's something called reversion to the mean. Reversion to the mean where things run. Things run, they get super hot. And then they have to revert back to the mean. Now, the moving averages are literally the mean. They're literally the average price over the last period of days. So as you can see here, we ran and we pull back to the mean. And then again, we are trading statistically above the mean. And what do? We pull back to the mean. Big run here. Remember, you can have two types of corrections. Reversion to the mean. You can have a price correction or you can have a time correction, which is a base. You can see here, got back close to the mean, took off, had a fall, and here we are. Okay, so here we are at this point. It's either going to be a pullback or it's going to be a base. Right now, it's looking more like a base. Definitely looking like a base, which tells me that, again, equities are a little tired. We're probably going to get some sideways action like we saw here. So, but again, late August, I don't see any reason why it's a down base. We could easily do kind of like an upward base where it just pushes higher like that. I don't see any reason why we don't see continued strength in equities. There's nothing right here, right now, telling me to be bearish or even to be worried. Now, September 1st, you're going to hear me change. I'm going to be a little bit more defensive. I'm not automatically going to go short, but I understand that this is the period where a lot of times big moves down happen. I'm going to be aware of it. Last week, pound was fantastic. Best performer. We like the euro the best. We like the euro the best on the long side. And you can see the euro did just fine this week. We liked the CAD on the downside, and we like the yen on the downside. As you can see, the yen strengthened this week. We'll take a look at the yen chart, and it is no longer looking like a good short. Kiwi has been really a terrible performer, and this week was the worst performer. And we'll take a look at that chart. It looks abysmal at the moment. Looks like there's just no floor in sight on the Kiwi. Cryptos, I don't want to spend a lot of time on this because on Wednesday, these were huge. And by Friday, they were smaller, with Litecoin actually down 4% for the week. Big volatility. We'll take a look at the charts on that one. All right, so we looked at equities. Let's take a look at the chart on the bonds. Now, this right here, take a look at this price action because we had our inflation report, our CPI, on Tuesday. Take a look at that. The bonds actually went up, meaning that they had already priced in a rate cut. And when that number came out, it didn't make it more likely to get a rate cut, maybe a little bit less likely. And you can see that with that PPI report, we're back up to 4.3%. We're still in that range. We're still in that range. And this is why I don't like dollar short here, because we needed a breakdown in bond yields. It didn't happen. So for me, the dollar is not a short. It's definitely not long either. It's really just a no touch to me. And here we have cryptos. As far as the basket goes, you can see we were coming up to all-time highs on the basket. And we just had a doji here. This is on a daily chart. We have lots and lots more candles to go. Yes, we could even pull back a little bit here, but I do think the crypto pullback should be bought, and that's really the trade I'm looking at this week. On the calendar, we've got Canadian CPI on Tuesday, and then we have our only central bank announcement, the RBNZ. Now, it's really too bad because I love the Kiwi short here. I love it. But I don't trade Kiwi over RBNZ meetings. Let me tell you why. It was probably back in 2011, I experienced about 220 pips of slippage. Yes, I had a stop order. News came out on the RBNZ, and that happened. Now look, 2011, it was a wildly different market, wildly different liquidity. Everything was wildly different, but that can happen. So I made a rule, no more trading Kiwi through the RBNZ. I really like it short. What I would love to see is them come out, cut rates, have the Kiwi pop. I would love to take a short on a pop on Kiwi. All right, we've got pound CPI coming up. Again, is this going to propel the pound even higher? It is the best looking currency at the moment. European PMIs on Thursday. Again, that should help push the European currencies higher if these numbers are good. And then this weekend, we have the Jackson Hole Symposium. I don't want to make a huge deal about this, but it became a huge deal. They've been doing this for like 30 or 40 years, where all the central bankers around the world come to Jackson Hole and they give speeches. Somewhere around 2011, I think Ben Bernanke used the Jackson Hole Symposium to announce monetary policy, and the market was not ready for it. It freaked out. And then he did it again next year. And so now everyone is like looking at it. It's why it's red. This should not be a red rated news announcement, because over the last 4 to 5 years, even maybe 10 years, it hasn't been that big of a deal, but it moved the market so much those first couple of years that they still rate it as, hey, this is something you should watch and need to watch. I don't see any reason to see any movement this year because, again, all the central banks are very clear on where they are and there's not many things happening. So this week, I like equities to go higher again, but we're running out of steam. We got the RBNZ on Tuesday, and we've got some nice reports out of Canada, which I like the Canadian dollar short, and out of the UK, which I like the pound long. So let's go in and take a look at all the charts and score everything from +3 to -3. Starting off with the cryptos here. So here's Bitcoin. Tried to break out here. Couldn't break out of all-time highs. And we just came back down. Okay. This happens. This happens when you have some bases and some pullbacks and they just run out of gas a little bit. Okay, that happens. The question is, where do you buy? I still like this range. This range right in here. Buying at the bottom of that range. So that's right around 115, 116,000. I think looking at a buy down in these areas, again, not a full position, but like half position, quarter position, build it up to where, if and when it does pop, then you're in a really nice cost basis. Now that's Bitcoin. It is definitely not my favorite. Bitcoin Cash looks the best by far because it did break out and it did hold for a day, and we've come back and we are literally just right at our support line, right at the 20-day moving average. This has got a lot of good technicals on it. So look, I like it here, but on my pullbacks, I like to see a green candle. I don't like to buy them as they're falling. I just don't like to buy them as they're falling on pullbacks. I like to wait for them to bottom out and then give me a nice bullish candle. I like to buy there. So I might not even be buying in until 605, 610, but I'm really waiting to make sure that that bottom is going to hold. So I can't be sure it's going to hold until I get a green candle off that level. So Bitcoin Cash is my favorite. Ethereum is also looking really good. Next little level here, let's call that 4,250, 4,200 to 4,250. Right in this area where we had about a 2 or 3 day base. I think that's going to be the next level of support. So let that come down into that area. Give me a green candle out of that. I will go ahead and buy that pullback. Just a classic textbook pullback. And then Litecoin, you know what? It looks okay. It doesn't look great. I think that Bitcoin Cash and Ethereum are the place you want to be. All right, moving on to Forex. Dollar. Now, dollar is a 0 on trend score and a 0 on velocity score. But that being said, I don't hate the range. One of the things we've been talking about is dollar yen being a great trading pair. And the reason, not necessarily bullish or bearish, but just a great trading pair is because they have the most movement when they actually move. So I'm looking at dollar here. I don't hate the dollar as a range bound trade here. I don't hate it at all. I mean, it's moving 150 pips from highs to lows. There's some money to be made in these ranges here. So look, if you want to trade dollar, just trade it on a range bound basis, buy at the lows, sell at the highs. But as a trend, it just does not work here. It is absolutely trendless. Coming to the yen. Now the yen is also at a 0, but I wouldn't call this trendless because this could be in the middle of a trend change. So again, we have this base forming here, little breakdown. rallied up to the 50-day moving average, and then came down, and look at where it found some support, right at prior resistance. So yes, we are in the middle of the moving averages. Yes, we're at a zero. But the big question is yen changing directions here from a weak currency to a strong currency? You've got to get above that line, and I'll start to talk about the yen having a trend change. As far as right now, it's just a no touch. Swiss franc, same thing. Can you call this that we have broken down? Maybe. We fell down here. We went a little bit below our 50. We've come up here. There's some resistance here, but we're still just at a zero. And the velocity is just not going anywhere. Because of that, technically speaking, you could look at this and say this is the start of a downtrend, but this looks more like a bull flag. Bull flag pattern where you get this big run and then you get this really narrow downtrend and then it pops up and runs again. So I don't like Swiss franc long or short. I'm just looking to put that on the shelf along with yen. Euro here looks wonderful. It just looks wonderful. It, technically speaking, is doing everything we want it to do. It came up to that resistance line, stubbornly knocked its head up against it, and on Friday it broke out. What's not to like about euro? Everything looks good on the chart for euro. Now the pound isn't as clear, but you can see that over the last 2 weeks, a lot of money is coming to the pound because it got overly pessimistic. And when we got some better reports out, it has been repriced. The big question is, did they just reprice the negativity or have they priced in now positivity? I'm not too sold on the pound here as being now the greatest currency in the world that everyone wants to buy because of whatever the reasons are. This is more of a, hey, it got too bearish and it got repriced. That being said, I am open to the possibility that it could break out. I mean, look at these 4-hour charts. There is so much buying on the bid that it just keeps creeping higher. These are very strong. You want to play pound on the strong side. I'm just not sold yet that it's going to break to new highs on the daily chart. But pound on any pullback. Again, take a look at these candles, these wicks. Anytime you get these wicks, yeah, be aggressive on those wicks. Those look like a great time to enter on pound on any sort of short-term pullback. CAD looking like a breakdown. But that being said, breaking down, but we got some more support down here. So CAD is at a -2. I like CAD short. I liked it last week. It actually fell more than the dollar. So I like it definitely as an alternative to dollar short. But don't expect there to be a ton of velocity on this. Aussie is just hanging out. And look at these candles. Long upper and lower shadows. That tells me stay away. That tells me don't try to play this. Don't try to play it. I mean, look at these wicks on all these days. If you had stops, long or short, you got knocked out. It's just telling you there's no trend right now. There's just trading. So if you did want to trade Aussie, I would say do range-bound trading and probably intraday trading. And that's about it. It is looking like it's heading down to the bottom of the range. So maybe there's a couple pips to the downside, but why would you go short Aussie when you have Kiwi short? Kiwi short is just looking beautiful. And as I said earlier, if it wasn't for the RBNZ on Tuesday night, I would really be wanting to hold this for the whole week. That being said, any pop, I am looking to short Kiwi this week because to me, it is the best looking short out there. So to wrap it all up here, we've got in currency, Euro strong, Kiwi weak. I think this is the number one trade on the week. Pound could be stronger than Euro again this week. I'm willing to think about this. And CAD looks to be the second best short here. So there's no question it's Euro pound against the Kiwi and CAD. And in crypto, it's Ethereum and Bitcoin Cash. That is definitely where the strength is. Looking at what is moving right here, right now, well, cryptos are not moving right here, right now. So cryptos are going to be a wait and see trade. But we have Euro and pound working strong, Kiwi working weak. That is definitely where we're going to start the week focusing on some trades. I do think there's a possibility of getting into these trades and then getting out before the report on Tuesday night, or take half off before Tuesday night, and then you can put the other half back on if you have a profit. Again, there's lots of ways to trade into those big news reports. Let's start off with Euro Kiwi. Euro Kiwi looking really nice. So we've got our next little bit of resistance. Well, let's just put it right here at 199. 199 is going to be that next point. You can see these green candles look really nice here. So whenever you see this move and you say, I like this move, these are difficult moves because it's already moved a lot. And so you kind of say to yourself, well, let me wait for a pullback. And sometimes they don't pull back. This is where I love scaling in. I love legging in. Take a half position. Take a third of a position. And if it just keeps running and never gives you a chance to get in, okay, you made a good trade on a third of a position. If it pulls back, then you can look to add that third. So again, let's say you get in and it pulls back down here into the 196.50 and then looks to bounce. Grab some more at 197. Make your cost basis a little bit better. Again, move your stop up on this. Then if it does break out again, then you can grab your last third. I really like that style of trading because as a trader, it's so hard sometimes. You take a look at a chart like this and say, where's the entry point? It's never pausing. It's never stopping. It's never giving me any technical pattern to get in, even though it did right here. That's a nice high base here on a 1 hour chart. But if you're not looking at the 1 hour chart, you didn't see it. This is where I like to just take what I call a teaser position. Hey, let me get in. And then let me then look to add on those good entry points. But at least I've got some skin in the game in a currency that is on the run. We could also look at pound Kiwi. You can see pound Kiwi is doing a nice high base here. Just a beautiful, beautiful high base here. Boy, what is there not to like here in this chart? And in fact, again, this is where if I was looking to make a trade right here, right now, I would choose Euro Kiwi because it's running now. However, it's already been running for the last day or two. If I'm looking to make a trade in the next, 2-3 days, all of a sudden now it's like, I do like pound Kiwi better because it is consolidating at the moment. And when it does break out, it should have a nice multi-day run. So to me, pound Kiwi is looking the best. And let's just take a look at Ethereum. I talked about this, about where we're looking for buy things right around 4,250, 4,200 to 4,250. So you can see we've got some room to come down. We got some room to come down. Look, it may not come down into this area. I understand that. And if it doesn't, we'll miss it. But this is, again, a very common pattern you see is the bull flag, the run up, and then the narrow downtrend. And that's going to work really nicely in this area for that bull flag pattern. So be patient on this one. I think you're going to be able to get it in the 4,200, 4,300 area on this bear flag. But again, you don't have to buy all of it down there, just buy half. And then when you do get the breakout of the flag pattern, buy the other half. That's a much safer way to trade this. Let's wrap this up. Will the crypto pullback be bought? Yes, I think it will, but I do think we are in that bull flag pattern. So I think we have one more little run and then one more big fall. And I think that is the time to start looking at it, which means late next week, Wednesday, Thursday is a possibility. And look, Euro is just looking great. Swiss franc is holding in there. Pound, I'm not sold on the daily chart yet, but the pound is definitely showing relative strength in the short term. That's where the market is right now. And I talked about Aussie Kiwi being not really all that tradable. Trade what's moving, trade what's actually trending and giving you predictable returns. Right now, dollar is in a range, but that's it. So I look and see what our traders are trading, and I look and see people trading like dollar CAD, and I'm like, boy, why are you trading dollar CAD? Like these, look, dollar CAD got a little bit of movement at the end of the week where dollar was sideways, CAD was down. But for the most part, dollar CAD has been a bust of a trade. It just hasn't been working. So play the things that are moving and ignore the things that aren't. All right, have a great weekend. Goodbye, everyone.